Thank you, everyone. So thank you, Steve, for the introduction. My name is Mayssa Jamil, and I'm a senior analyst at Ampere Analysis. And today I'm going to talk to you about the uptake of SVOD ad tiers across leading markets. So by the end of this presentation, we'll have seen what drives ad tier adoption, how streamers are responding, and what this means for the future of the industry. So let's start by looking at how the streaming landscape has evolved. So over the past 5 years, the market has undergone significant transformations. This evolution began with a boom period between 2019 and 2022, which was fueled by both the launch of new DTC platforms as well as the pandemic. This was then followed by slowdowns in the market, and these were due to increasing economic pressures, rising content costs, and market saturation. So although we do see some recovery in 2024 in North America and APAC, we do expect to see this growth diminish in the long term and start to plateau. So this has forced streamers to rethink their monetization strategies. And one thing that came out of this is the launch of ad tiers. So since major streamers started launching ad tiers, we've actually seen increased receptiveness. Sorry, I actually think I went to the wrong one. Yeah, we've actually seen increased receptiveness of ads globally. So this is due to two things. So first of all, obviously the low costs of those ad tiers, but also the light ad loads that we're seeing on streaming. So according to research done at Ampere, which tracks ads on streaming services in the US, we're actually seeing around 4 minutes of ads per hour on Disney+, and between 1 to 2 minutes of ads per hour on Amazon and Netflix. So this is actually significantly lower to what people are used to on broadcast TV, where in the US they've got around 15 minutes of ads per hour. So this plays a role in helping users become more comfortable with watching ads. And we do expect to see this growth accelerate as consumers start to pay for the, want to pay for the lower price tiers. So one thing that we're seeing here, so let's take a look at what is actually driving the uptake of these tiers. So here we're looking at new signups to 3 major services in the UK. Sorry, we're actually delayed on the, yeah, thank you. Sorry, so just back to the slide. Consumers are becoming more and more comfortable with ads, and this is actually leading to strong and sustained ad tier growth in both the US and the UK. So this data is sourced from our SVOD economics product, and this tracks daily sign-up and churn data in the US and UK. So as you can see here, as of the end of 2024, ad tiers for Netflix and Disney Plus in the US represent around 25% of their total user base. This is a little bit different for Disney Plus in the UK. They've got a lower share of users on their ad tier, but the tier did launch over a year later, and they do seem to be following a similar growth trajectory. So we do expect this to continue to grow through 2027. So let's take a closer look at what's actually driving the uptake of those ads. So we're looking at signups here to 3 major services in the UK. We've got Amazon, Netflix, and Disney+. And what we're seeing is that in line with their strategy to shift all their existing users to the ad tier, most of the signups to Amazon in 2024 were actually to that tier. We're seeing a little bit less than half for Netflix and a third for Disney+. So what we typically find, with the exception of Amazon, what we typically find is that the bigger the price gap between the ad-free tier and the ad-supported tiers, the higher the share of new signups that we're seeing to the ad tier. So this means that as streamers continue to increase the price of their premium tier, we do expect to see users take the ad tier more and more. So another thing that's quite interesting with UK consumers is that among the users that took the ad tier in 2024 for Netflix and Disney, 44% of the Netflix subscribers and 32% of the Disney subscribers actually weren't taking any service at the point of signing up to the ad tier. So this actually shows that the ad tier is actually able to attract VOD-averse consumers to the platform. And this will therefore increase market penetration in the UK. You can see that this is quite different in the US. We're seeing a much more even distribution among stacking habits of ad tier subscribers. And particularly for Disney there, you can see that they're very high stackers, and this is mostly due to the Disney bundle. So this difference shows us that the US is a more competitive market. They've got more major SVOD players over there, and this translates to higher stacking rates. So on average, US households subscribe to around 4.9 services per OTT home, compared to 2.3 in the UK. So as a result, US consumers tend to sign up, churn, and resubscribe a lot in the US compared to the UK. What we're seeing here is for services like Disney Plus and Netflix, we're actually seeing that a lot of users that took the ad tier in 2024 were actually just downgrading from the more premium tiers. This is different to services like Hulu, Discovery, and Paramount Plus. So ad tiers have actually been, and this is really interesting actually, they've been really effective in bringing in subscribers that had never taken the service before. Also, you can see the green bars there showing resubscription rates as well. So users that had churned and are now resubscribing to the service. So this shows us that ad tiers actually helps stacking. So it's with the high stacking rates in the US, this is actually helping users add another service to the services that they already take. And looking at retention rates, we're seeing in the US for Netflix that among users that signed up to the ad tier in Q1 2024, 71% of them are actually still subscribed today. And this is different to the premium and standard tiers, which are at around 55%. So what this means is while we are seeing users initially downgrade to save money, and this is causing some cannibalization from the ad-free tiers, ad tiers are actually proving to be stickier. So users are churning less. This is leading to higher customer lifetime value, and therefore it's making ad tiers a much more profitable and sustainable model for streamers. So to capitalize on this trend, streamers have actually been investing in targeted strategies to boost the ad tier. And one of those strategies, as I think you're all expecting this, live events, and particularly live sports. We were talking about this a lot last year. And live events are proving to be a major driver of ad tiers. So in 2024, we saw live sports events such as the NFL, the Super Bowl, boxing matches. We also saw stand-up comedies and award shows. More recently, we saw the SAG Awards on Netflix. So Netflix in particular has been leaning more and more into live events and recognizing the ad revenue potential that comes with large-scale real-time audiences. So what you're looking at here is more data from our SVOD economics product, and these are daily Netflix signups at the end of 2024, and they're split by tier. So you can see the two peaks there. Both of them are associated to live sports events. We've got the Jake Paul versus Mike Tyson boxing match and the NFL Christmas game day games. So there are actually two games on that day. And we're seeing that among the subscribers for both of those events, over 50% actually took the services with ads. So this is very good news for Netflix. Live programming is really critical for ad models because there is a lot of value in being able to sell ad space to advertisers, knowing exactly when the content and therefore the ads are going to be watched. So beyond live events, and this is something that my colleague Richard touched on earlier today, beyond live events, we've got bundling. That's also something that played a key role in boosting ad tier signups. And it's a strategy that's particularly effective in the US. And one notable example is Comcast's Stream Saver bundle. So this bundle launched in May last year, in 2024. And It gives Xfinity and TV and broadband subscribers in the US access to Apple TV, Peacock Premium, and Netflix with ads. So the chart shows how the estimated distribution of Comcast broadband subscribers amongst the three services before the launch of the bundle. And looking at Peacock and Apple TV, the primary opportunity there lies in leveraging Netflix's scale. For Netflix, however, there are less subscriber gains to be had. But there are two main opportunities here for them. So the first is the streamer can leverage the high retention that comes from bundles. And according to a study that was done at Ampere last year, at the end of 2024, we estimated that Netflix could save anywhere between $51 to $265 million from churn reduction alone from this bundle. The second opportunity that Netflix has here is, of course, transitioning its users to the ad tier. So increasing the addressable audience for advertising is a huge incentive for streamers. The larger the advertising audience, of course, the more attractive they become to advertisers, and therefore the more they can charge. So these two examples I just showed you here highlight why both bundling and investing in live events have become essential tools for driving ad tier adoption and profitability. So to conclude, at the start of this presentation, I showed you a chart which showed that the subscription streaming market is starting to plateau, but that was in terms of total subscriber figures. When we look at it from a revenue point of view, it's actually looking much more positive. We expect for subscription OTT revenue to continue to grow despite market saturation. This will be mostly driven by price increases. But what's most interesting here is that the ad revenue is actually already growing faster than the subscription revenue. And this really reinforces that the future of SVOD will very much be shaped by those ad-supported models. Thank you so much. If you want to talk a bit more about this, I'll be around today. You can just grab me and ask me any questions you have. You can also email us. And yes, please feel free to download the presentation from the QR code. Thank you.